The global stock market has taken a significant hit recently. Major indexes like the S&P 500 and the Nasdaq have seen big drops. This decline has impacted markets everywhere, from Asia to Europe. Even cryptocurrencies like Bitcoin haven't been spared. Many analysts believe this downturn signals a shift in the global economy. There's a growing fear that a recession, particularly in the United States, is looming large. This uncertainty has led investors to pull back from riskier assets, leading to the market slump we're seeing. From the reasons behind the crash to expert opinions and advice for investors, we'll cover it all. So, stay with us as we navigate these choppy market waters together. One of the primary drivers of this global market downturn is the United States. Recent economic data coming out of the US has been less than stellar, particularly when it comes to job growth. The labor market is often seen as a key indicator of economic health. When job growth is weak, it raises red flags for investors. This weakness in the US economy has ripple effects across the globe. The US is a massive player on the world stage, and its economic performance influences markets everywhere. So when the US economy shows signs of slowing down, investors get nervous, and that nervousness translates into selling pressure in markets worldwide. Adding fuel to the fire is the Federal Reserve's response to this economic uncertainty. The Fed has been raising interest rates to combat inflation. While necessary, these rate hikes can also slow economic growth. Investors are now trying to gauge how much further the Fed will go and what impact it will have on the already fragile economy. While the global market downturn has sent shockwaves everywhere, India has shown remarkable resilience. Yes, the Indian stock market has experienced some volatility, but it's held up better than many of its global counterparts. One key factor is India's strong domestic investor base. Indian investors have shown a greater appetite for risk and a continued belief in the long-term growth story of the Indian economy. Furthermore, India's economy is on relatively solid footing, supported by strong domestic demand and government initiatives. This inherent strength in the real economy provides a level of confidence for investors, even amidst global uncertainty. Section 4. What the experts are saying. Market experts and economists are closely watching the current situation, and their opinions are mixed.
Some believe this is a short-term correction and that markets will rebound once the uncertainty subsides. Others are more cautious, suggesting this could be the beginning of a more prolonged downturn.
JP Morgan, for instance, has placed the probability of a recession in the United States at 50%. They argue that the Fed's aggressive rate hikes, while necessary to control inflation, increase the risk of a hard landing for the economy. Goldman Sachs echoes this sentiment, raising their recession probability forecast as well.
However, not all experts are predicting doom and gloom. Some point to the resilience of the U.S. consumer and the strong labor market as reasons for optimism. The coming months will be crucial in determining which direction the economy takes.
Section 5. Riding out the storm advice for investors. Navigating volatile markets can be nerve-wracking, but it's important to remember that market corrections are a normal part of economic cycles.
Instead, take a deep breath and focus on your long-term investment goals. Diversification is your best friend during times of uncertainty. Don't put all your eggs in one basket. Instead, spread your investments across different asset classes like stocks, bonds, and gold. This helps mitigate risk and ensures that even if one asset class is underperforming, others can potentially cushion the blow.
Try to look beyond the short-term noise and focus on the long-term potential of your investments. If you've invested in fundamentally sound companies, they are likely to weather the storm and come out stronger in the long run. Section 6. Keep calm and invest on. The global market downturn is a cause for concern, but not for panic.
India, with its resilient economy and strong domestic investor base, is well positioned to navigate these challenging times.
Seek advice from financial advisors, stay updated on market trends, and continue to invest wisely. So, stay calm, stay invested, and ride out the storm. Subscribe to my channel for more insights and updates.